Wells Fargo agricultural economist Mike Swanson said at last week's Nebraska Soybean Day and Machinery Expo he doesn't believe better commodity prices will bail corn and soybean producers out of the current economic situation. While some analysts see a growing world population as a way to eat up excess supplies, Mike believes it's important to know where the population increases will occur. We spoke with him at the expo in Wahoo about the larger factors impacting demand and profitability, such as the future for biofuels, interest rates, and China's future plans. But we started by asking why he thought higher prices wouldn't be the cure for farmers.
You know, I think we have great demand coming our way, more people to feed, more money that they're going to spend. But we have to remember we have great technology coming our way as well.
A lot of people see population growth as a way to eat up this excess supply. Why might it not be?
Well, it will be there, but what we're seeing is also dietary change. And the real driver is who and where. I like to point out that if more than half our expected population growth comes in Africa, will they have the money to pay U.S. prices to U.S. farmers, or will they need to go someplace for cheaper grain or grow it themselves? So just saying there's more bodies doesn't finish the question. It's like, who is it and where are they and how much money do they have?
What about domestic demand? Biofuels you see as a point of concern?
I do, because what we're seeing is a great economy right now. 4.1% unemployment, 200,000+ jobs created on a monthly basis, and gasoline distributions are negative this year over year, and we don't have high gasoline prices. And so what we're seeing is a pushback from higher fuel efficiency, less miles driven for certain people, and that's really kind of constraining the demand for gasoline, which constrains biofuels.
So RFS, what impact does the RFS have on that then?
It's a huge driver. You know, it's very political. You know, whether you love it or hate it depends on who you are and why you want to do something. But RFS has literally become the most important part of the fuel demand system. And I point out all the time, the EPA has supplanted the USDA as the most influential driver of agriculture in today's world.
China is influential for soybeans, but could potentially be influential in the future with ethanol and corn growth as well. Where do you see China growing to and playing a role in when it comes to the U.S.?
You know, it's interesting. They put out two policies simultaneously: more ethanol for fuel quality, air smog reduction, also electric cars. And so I would be very careful of thinking about what the timing sequence is. Maybe they pick up more ethanol in the interim, which is great for us. But I don't think the Chinese see using corn and ethanol as a long-term solution for a country with 1.3 billion people. I think they certainly see battery technology advancing fast enough over 10 years that will be a much bigger driver of air quality in China.
About a year ago, we were talking about the impact of higher interest rates, and now we've seen a stair step up this year. Do you think that's played a role at all in the finances, or will it continue to play a role in 2018?
Not really. What's interesting is when you write a check to pay back the bank, remember how much is interest and how much is principal. You know, in today's market, you know, a $100,000 check right back to the bank, $97,000 of that is principal, $3,000 is interest. So if you're having trouble paying your banking bills, it's more about an interest, not less of an interest problem, more of a principal problem.
What about new loans?
New loans, well, we'll see that. It'll be interesting take land, for example. As interest rates do climb up a little bit, we'll see that kind of pushback on land values as well. So new loans, especially on land, will be an interesting development.
Strength of the dollar not as strong as it was about a year ago this time. Do you think that makes U.S. exports more competitive?
You know, it depends on which product and where. China has done a good job of maintaining a relatively strong currency against the U.S. dollar, which has been great for the soybean market. But we're still seeing relative weakness from the Mexican market and the Canadian market, which are our two other largest trading partners. So even though the dollar has weakened a little bit, we're still a much more robust growth economy than some of those other ones, and therefore we're going to be pulling in more imports than we can push out exports to some degree.
So the final question then, with these macro things in mind, I think I interpret correctly that you believe the fix will be producers looking at costs and really reining them in.
Right, in a different way. It's easy to say you got to cut costs. I'm talking about Moneyball. That was the whole point of the argument is, do you know who you're paying and why you're paying them that? And that's a different question than just saying cut costs. Everybody hears that and they think, well, I've already cut everything I can. The question is, do you know your crop chemical, what the right price, seed genetics, and the rent? There's a tough one. There's a lot of land out there that's probably overpriced still, parcel by parcel, farm by farm, and are you willing to make a tough choice when a landlord just doesn't accept reality? That's what I mean by cutting costs, not just, hey, I got to slash everything by 10%. That's not any way to look at it.